This short clip is from my live trading room. You can engage directly with my fabulous team and me at LaDucTrading.com for all our research and trades. Or for just my daily live streams, you can access via YouTube memberships. All links are in the description. So here is that growth rotation. We're still underneath zero, which basically means it's a ferocious bounce. It's very much mechanical and short covering, etc. Much more so than structural flows, but meaning fundamentals coming in and bidding this up. But the point is, it doesn't matter. It's still fabulous for chasing. And I wrote an article yesterday also, especially the underowned stuff. Anyway, here's this growth value ratio that's pushing into potentially 2.075. It's made it up, obviously, above here. And then it's right into this indicator right above it. Okay, so I can still see a little resumption here in underowned software, semi-strength, market strength. We've gapped up yet again. And it's a false sense of calm because we have the weekend risk that will be approaching. And we have, let's see, a few news items of note. As the blockade on Iran continues, U.S. military officials are planning for another potential escalation. U.S. ground operations on Iranian soil, 2 U.S. officials said, Washington Post. We also have Iran pushing back and saying Iran's military warns it will block all trade in the Red Sea. That hasn't been blocked yet. The Gulf and the Sea of Oman if the U.S. naval blockade continues, saying any threat to its ships would be a prelude to violating the ceasefire. Now, on the upside, you have Mike Wilson coming out saying he is a structural bull. So he was on yesterday talking up the new bull rally. So you have a lot of consensus Wall Street folks, and I profiled a bunch of them yesterday in this write-up. It's complicated. So the write-up has the bullish consensus folks that are coming in, whether it's CEO of BlackRock getting very excited, saying credit is perfectly fine, or it doesn't really matter. Citibank, again, BlackRock recommending an overweight on U.S. stocks from neutral. I saw that headline at least half a dozen media outlets. That was a lot of push to get folks to come back in the organic that they don't want to miss further upside. We're very extended. We're hitting 7,000, which is that call wall, but we definitely have a lot of folks when price changes, so does narrative, coming out of the woodwork and on TV talking up the bull rally that is not just short covering, they say, it is structural. So we shall see. In the meantime, you also have IMF warning. And then, of course, Griffin came out of Citadel, CEO, and said, yeah, we are going to have a global recession. And basically, it doesn't matter. Fundamentals right now are such that we're waiting for earnings, and earnings season has already been expanded on the upside for expectations. So they better meet, or there's going to be disappointment fast and furiously. Anyway, long story short, you've got a ramp right now that is likely to peter out Wednesday through Friday in that 7,000 range. You don't have any economic data that's really pulling yields higher. It hasn't come in as hot as feared, but it has beat expectations. Let's put it that way. The recipe is that the economic data is also tied to bond formulas. So if they can control the input, they can control the reaction, and they are. So you've got a controlled dollar, also suppressed VIX, yields, oil, on all kinds of expectations of the ceasefire. But might I just remind, we have a ceasefire that ends next week. So we got to be a little bit more careful as it relates to getting too excited. Right now we have equities in a grip of absolute rally cry. The problem is they're going to hit the 7,000 call wall and likely come back in a little bit. And then next week we'll have a nice test of this explosive bounce and really see how we can come back down and if organic buyers step in and buy it. So right now you got escalation ahead, but the market doesn't see that yet. You have got IGV, which is the stuff that's underowned that I talked about yesterday. This was the bounce area, 74.31. And I said, wouldn't surprise me if we can go back up into 83, led by Oracle and Microsoft. So IGV is the underowned sector. You've got a lot in IGV, but Oracle is the hot fire flames candidate that benefits greatly from the ceasefire. Again, data centers, their contract with Lebanon, there's all kinds of stuff going on with them. Anyway, Oracle is definitely still leading, and Microsoft has also continued higher. You get the gist. It's already above 395. We talked about that at length yesterday. So Oracle and Microsoft are doing gangbusters, but the IGV plays are still where the money is being run or rotated. So this is a quantum play. Oh yeah, quantum also, NVIDIA wants to help quantum. So what do we have? 1323, and then boom, a big, big, big move higher. Again, stuff that's under-owned. This is an AI play, Datadog coming up. But notice how they're all bouncing into the 10-week, like across the board. The trick for recovery is getting and staying above the 10-week. I'm just randomly going down the AI hit list here. Snap is not AI. They are laying off 40% of their workforce, and it's freeing their market share here up 8%. It did have actually a nice bottoming signal right there, so nice follow through. Now we have talked about, someone asked about this. It hasn't done any reversal yet until this week. Under-owned now is starting to get attention. It is up 6% this morning on pretty much no news, and it has earnings coming up very, very soon. So you can see IGV is still the place to play. Yep, the melt up continues in Microsoft oversold bounce, Oracle oversold bounce, Meta oversold bounce, Netflix hitting its head at the 200-day and the 106.45 right here. Tesla, look at that tight climb right back up to 367, but that is your descending 21-day. So it's still having a tough time. It did bounce off 340, and the 100 week has to stay above this 362 to move into the 10 week. We have a lot of pushes still. You've got potential 380 in Tesla if it holds this 370, 368, I should say. And NVIDIA bounced a lot in this 2-week extravaganza. All right, so Netflix hit the 200-day, which is the 106.45 level I gave you. Microsoft needed to get above, and it has so far gotten above that very key kind of 395, 397 level, already pushing above the 55-day. Next target, 407 into 420 potential if this keeps going. Oracle, we already had into 171.20. Still, I think it's already done. I had 171.20 yesterday. We hit today 172.15. So a dollar overshoot. That's pretty good. All right, JD continues higher. That's gorgeous. I had 32. It's now 31.5. So this is stunning. This is your monthly support. Look on a monthly here. This is your monthly support. Lots and lots of good support here at that 24.65 for JD. Beautiful, beautiful bullish engulfing with follow through. 28 has held, and now it's pushing above 31. I said it needs to stay above 31 to move higher. It looks fabulous. BABA's also coming off that 120. If you want a low risk entry, it's got to stay above 120. You got some crypto names that are also coming up off the bottom. AI names coming up off the bottom. Buy now, pay later names coming up off the bottom. ServiceNow, Left for Dead coming up off the bottom. When I said under-owned in my write-up, that's what I mean. So stuff that has this short covering, they're still helping the markets attract the bulls and buy what's on sale. Microsoft is still running. Under-owned is still in play. Look at the oversold bounces just across the board. Tesla pushing higher, racing into that 380. Lots of chases, tons. NVIDIA approaching 199.76. Let's call it 200. This is where it broke down last time in the November fake breakout fast failure. I had 171.20 as a price target, and it's there. So we're all the way back to February levels for Oracle. Yeah, basically everything that is under-owned, under-loved, however you want to put it, left for dead, is rising from the dead. I love that. All right, SPX is still pushing. You can see the prior high of January was 7002.28, and we have 6992.5. It is almost into the prior high of January, this SPX advance, and you can see what's moving. Look at all these oversold plays, Datadog, Hood, Now, Oracle, TTD, that's been left for dead in a big way. App, Intuit. And of course, you got banking like Morgan beat this morning, DoorDash, Uber. I mean, look at the oversold plays that are moving higher. And then you get some news like Avgo. But overall, most of these names that are rising up, CRM, FICO, Adobe, they're oversold, underloved, under-owned growth plays, and they're helping the market push into that 7,000. So if you're chasing, you get a few breakouts, You get a few Mag 7, obviously continuation plays. I've got 380 for Tesla, for example, right? Microsoft pushing higher, 407.5 coming into view. Nvidia hitting its head on 200 very, very soon. Apple sitting on that 260. Qs only look like 0.5% higher, but they're incredibly strong because of the underowned stuff that is rising up from the bottom. We're there. So we have a growth rally that has moved into resistance. Can you see this here? Which I highlighted past few days. This is the Mag 7 ratio pushing into resistance pretty darn soon. The same time that this growth rotation is moving into 2.075, that which I have written about. So at the same time, SPX is moving into 7,000. So we have kind of a congruence of events coming in. Doesn't mean we're going to turn tail right away, but do be aware 7,000 is a call wall. So take care at that level. And we have this pushing into 2.075 growth ratio. It will be a melt up if we get above it.
Join Club to trade with Samantha. Scan this QR code or click the link in the description.